Welcome to the deep dive. We're jumping straight into technical analysis and trading today. Think about how you might gauge, the strength of a runner in a race. Are they speeding up or losing steam?
Right. That's kind of what we're trying to figure out in the market with momentum.
Exactly.
And a really popular way traders try to anticipate those shifts is with the stochastic oscillator.
Yeah.
It's designed to show you where the current price sits relative to its recent high-low range, gives you a sense of maybe overbought or oversold conditions.
Right. And today, we're putting one specific strategy under the microscope. It comes from a YouTube video, Easy Trading Tips, and it lays out a method using the stochastic for potential buy and sell signals.
Yeah, so our goal is to really dig into the mechanics of this strategy, see how it works, what the video claims.
We'll look at the setup, the specific conditions for buy and sell trades according to the video, and some of the key things they point out.
Sounds good.
Okay, so first step, according to the video, is getting the chart set up. They use TradingView, which, well, lots of people use that.
Right, it's pretty common. The crucial part, though, is the stochastic oscillator settings. The video specifies a K period, or K length, of 12.
Okay, 12.
Then there's K smoothing. Now, our notes here say, which seems like a transcription thing, maybe?
Yeah, that looks odd.
Yeah, but based on how these indicators work, and, to keep it logical with the D period, a smoothing value is usually a number. So 4 makes the most sense in this context, especially with the D period they mentioned next, which is 3.
Okay, so let's go with that understanding. K period 12, K smoothing 4, and a D period of 3.
Exactly. 12, 4, 3.
Got it. 12, 4, 3. Easy enough. Now, they also use another indicator alongside the stochastic, don't they?
That's right. To add sort of another layer of confirmation, the strategy uses a 50-period exponential moving average, an EMA.
Right, the EMA, which gives more weight to recent prices compared to a simple average.
Yeah, exactly. So it tends to be a bit more responsive to what's happening right now.
All right, so we've got our stochastic set to 12, 4, 3, and the 50 EMA on the chart. Let's get into the signals. How do you actually spot a buy signal with this setup, according to Easy Trading Tips?
Okay, so for a buy signal, the video lists a few key conditions. First, those two lines on the stochastic, the per K and per Teddy lines, they should have come down from the overbought zone. That's generally like 75 and above. And the strategy mentions they should have touched or gotten really close to the 80 level.
Okay, down from near 80.
And importantly, as they move down, those two lines shouldn't have touched each other.
Right, no crossover on the way down. Got it. What's next?
Then these lines need to touch, or maybe even dip just slightly below the oversold zone. That's the 20 line, typically.
Okay, so they hit the 20 line. Is that the signal?
Not quite yet. The actual buy signal triggers when you see an upward moving candlestick pattern form.
Ah, the candles, like price action confirmation.
Exactly. And it needs to form at or very near the support level offered by that 50 EMA after the stochastic has hit that oversold area.
Okay. And does the video give examples of the kinds of candlestick patterns?
Yeah, they mention things like a hammer pattern or maybe a bullish engulfing pattern, something showing buying interest coming in.
Right.
And the timing here is apparently pretty important. They say this buy signal candle should ideally show up within, say, 2 to 5 candles after the stochastic hits that 20 line.
2 to 5 candles, so not too long after.
Right. The video kind of implies that if you wait much longer, the signal might go stale or become flat. You want to catch it relatively quickly.
Makes sense in, faster markets. What about once you're in risk management, profit targets?
Good question. For a buy trade, the suggestion is to put your stop loss just below the low of that signal candle.
Okay.
Or maybe even the lowest low of the last few candles before it for a bit more room. And for taking profit, specifically for intraday trading, they suggest aiming for a 1 to 1.5 risk-reward ratio.
So risking $1 to potentially make $1.50.
Exactly. And they show an example in the video, I think, where a hammer and then a bullish engulfing formed right at the EMA support just after the stochastic dipped below 20.
Okay, that paints a clear picture for the buy side. Now, let's flip it. How does this strategy look for spotting a potential sell signal?
So for a sell, it's basically the mirror image. The two stochastic lines, again, moving without touching each other on the way up this time, they should rise up from the oversold zone. So maybe starting from around or below 25, having touched or gotten close to that 20 line.
Okay, coming up from the bottom and then heading towards the overbought area.
Precisely. They need to cross or get very close to the overbought zone, that 80 line.
And the trigger.
The sell signal triggers when a downward moving candlestick pattern appears at or near that 80 line, or maybe just after crossing it. And this could potentially line up with the EMA acting as resistance from below.
Okay, so similar idea, just flipped. What kind of the bearish patterns are we looking for here? Like a shooting star?
Exactly. They mention things like a shooting star or a bearish engulfing pattern. And just like the buy signal, they stress that this sell signal candle should ideally appear within 2 to 5 candles after the stochastic crosses over that 80 line.
Same timing window, 2 to 5 candles.
Got
it. And managing the sell trade, stop loss, targets.
For a sell, the stop loss suggestion is just a bit above the high of that signal candle.
Okay.
The initial profit target is, again, that 1 to 1.5 risk reward. But they do mention that if you feel the market's in a really strong downtrend, you might potentially aim for 1 to 2.
A slightly bigger target if the trend looks strong. Okay.
Yeah. And again, they provide an example of a sell, I think, involving a shooting star and a bearish engulfing after the stochastic went over 80.
All right, so we have the rules for buys and sells. But, trading's rarely just about rules. Did the video mention any key considerations or ways to refine this?
Oh, absolutely. A really key point they stress is waiting for that candlestick pattern confirmation, right at the EMA for buys or near the 80 line, perhaps near EMA resistance for sells.
Right. Don't just trade because the stochastic hit a level. You need the price action to agree.
Exactly. You need that extra piece of evidence.
Okay.
They also make it clear this isn't about, taking tons of trades all day long.
Quality over quantity.
That's the idea. Aiming for fewer, but hopefully higher probability signals. And interestingly, the creator mentions this is actually just one of 3 strategies they teach using the stochastic oscillator.
Oh, really? So there's more to it.
Apparently so. The other 2 focus on trading based more on traditional support and resistance levels, and another for situations where maybe neither support resistance nor the EMA gives a really clear signal point.
Huh. So this EMA-based strategy we're discussing is just one piece of their puzzle.
Exactly. And the video suggests that if you were to combine all 3 strategies, you might potentially spot, they say, around 5 to 7 perfect signals a day.
Okay.
They also note that while you could use this on various time frames, for intraday trading, like, closing out before the end of the day, they recommend sticking to shorter ones, generally up to the 1-hour chart.
To avoid holding overnight? Yeah, that makes sense.
Right, avoid that overnight risk. And one more thing about the EMA.
Yeah.
The idea of added confluence. The signal might be seen as stronger if the stochastic gives a buy or sell signal right as the price action shows a clear rejection off the EMA.
Ah, so if price bounces hard off the EMA, just as the stochastic hits oversold and turns up, that's like a stronger combination.
Potentially, yeah. That confluence could add weight to the setup.
Now, one thing that definitely came across in the source video was, well, the creator seemed extremely confident about this strategy's success rate.
That's true. They start off pretty boldly, mentioning they feel the success rate is almost too high to state, and they point to things like a very high percentage of likes, like 98%, on a related video as evidence of user satisfaction.
Okay, so they're presenting it as highly effective based on their view and audience feedback.
Yes, that's the information presented in the source. But, it's always important with any trading strategy.
Yeah, absolutely.
To approach it with a critical eye. Do your own homework, your own back testing, see if it actually fits your style and risk tolerance. No guarantees in trading, right?
Couldn't agree more. Okay, so just to quickly recap then, we've looked closely at this specific stochastic oscillator and 50 EMA strategy from the Easy Trading Tips video.
Right. We covered the settings 12, 4, 3 for the Stoch, 50 for the EMA.
The buy signal conditions. Stoch down from near 80, hits 20, then upward candle pattern near the EMA support within 2 to 5 candles.
And the sell signal. Starts up from near 20, hits 80, then a downward candle pattern near the 80 line or EMA resistance, again within 2 to 5 candles.
Plus the key points about waiting for that candle confirmation.
Aiming for quality signals, not quantity, remembering this is just one of 3 related strategies they present.
Using shorter time frames for intraday, and that idea of added strength when the signal lines up with an EMA rejection.
Exactly. And we noted the creator's strong claims about success, but also the crucial need for your own validation.
Definitely. So this deep dive has really unpacked one specific approach using these indicators, as laid out in that video.
Yeah, it gives you a clear blueprint of that particular method.
So as you're listening, you might want to think about how this kind of strategy aligns with, your own trading personality, your risk comfort level, how much time you can actually spend watching charts.
Good points. And if it does seem interesting, maybe check out those other two stochastic strategies the video mentions for a fuller picture of their approach.
Which leads to maybe a final thought for you to chew on.
Yeah.
How might combining momentum indicators, like this stochastic oscillator, with other types of analysis, maybe looking deeper at price action patterns or bringing in volume analysis, how might that further refine your own trading decisions?